Hello, this is Professor Marsh, and this is a special lecture to prepare you for the final exam, and it deals with Chapter 8 in your book, Section 6, so 8.6, the bank reconciliation. This is another one of those basic skills that can boost your marketability in accounting if you know how to do this. I've discussed this in the lecture for Chapter 6 before, but I do want to go through the example that is in Section 8.6, both Figure 8.6 and then also the example of feeder plumbing bank reconciliation for the period that ends on July 31st, 2018, or actually as of that date. So a bank reconciliation is as of a particular date, typically the closing statement for the bank's accounting period. So with that, I am going to ignore the call that just came in and see if I can get this lecture finished before we have more crazy clients going on. So you can see in Figure 8.6 the basic format of a bank reconciliation. And as we discussed before when we did the lecture for Chapter 8, which I think may have been in Unit, I forget if it's Unit 7, 8, or 9, but this particular bank reconciliation, as you can see, just the format with the X's. I'm looking at Figure 8.6 in your book. On the left-hand side, what you do is you reconcile the bank statement to the bank balance. And then on the right-hand side, you reconcile the unadjusted bank balance to the adjusted book balance on the right-hand side, taking into account what you learn from the bank statement. So when you get the bank statement, the bank tells you what they know about your account based on what's posted at the bank. And then you have to adjust for what the bank doesn't know on the left-hand side. So they don't know about the checks that you've issued that haven't cleared yet. They don't know about the deposits that have been made that are in transit that haven't made it back to your account yet. Now, of course, this is, an earlier time, I think, when these examples were written back at Rice University. Nowadays, the deposits can be entered, simply by, scanning the check with your phone. So it's a much quicker process as far as making deposits, and checks are typically clearing much faster than they used to when they had to handle the paper. People would write a check and send it to pay a bill out on the West Coast, knowing that it wouldn't make its way back through the banking system, through the Federal Reserve System, back to your bank, perhaps for several days or even a week or two. But that's all been speeded up because of the pace of technology and what we currently enjoy. So you have the example of feeder plumbing. Let's look at the in your book at the example of the completed feeder plumbing bank reconciliation on July 31st, 2018. Before we go back to the specific items, so there are 8 specific items that you're supposed to adjust for, but let's just look at what it looks like in concept overall. The views maybe from 30,000 feet. So on the left-hand side, you begin with the bank statement balance, and you can see from your statement, that's your source document for this, is the bank statement balance as of the end of July was $77,040. And what you see as you're adjusting it is that the bank didn't know about a deposit you made, and there's also a bank error against you which you have to correct, and so those are increases to to the bank statements balance, and they total $34,620, adding the deposit that was made at the night deposit that didn't show up on the statement that was sent out, and also the error that was made by the bank because they deducted a check from your account when it should have been deducted from a different customer's account. Now that's almost impossible to occur nowadays, but I guess it can still happen. But with our technology and electronic coding and magnetic ink, it's very unlikely to occur. There's many checks and balances inside every bank's bookkeeping and transit system. But then the bank doesn't know about a couple of very significant checks that you've got outstanding, and so you list those checks and you have to deduct that from the bank's balance, and you end up with an adjusted bank balance of $92,040. Now over on the right hand side, you begin with your book balance, and your book balance on your books was $32,760. But what you didn't know, and again this is perhaps from an earlier time with merchant accounts, but you didn't know that you had credit card receipts of $60,000 plus interest earned on those receipts of $1,800. And so you have to adjust your book balance for the amount of deposits that the bank knew about but you didn't know about. And so you add that $61,800 and you get a subtotal of $94,560. Now what you find also that the bank knew about that you didn't know about is that one of the checks you deposited for $2,200 from the Burson account bounced, and so you have to take that out of your balance. And also there was a recording error that needs to be deducted, so you need to take that out. And then also the bank charges you a service charge, and you don't know about that till you get your statement. And so you add all those up together, and those are deductions of $2,520, and that gets you to an adjusted book balance of $92,040. And that is your bank reconciliation. And fortunately, you've been able to reconcile the bank's numbers and your numbers to the same number, which is now your adjusted book balance, and now you're ready to begin the month of August. Now, after they go through these various adjustments, they show you how to record the transactions. But let's go back and look at the transactions and just make sure we understand what we're doing. So as you go back into the example, assume the following circumstances for Feeder Plumbing Company, a small business located in northern Ohio. After all posting is up to date at the end of July, the book balance shows $32,760, and the bank statement balance shows $77,040. So you would begin with those numbers at the top of the right-hand side and left-hand side of your worksheet respectively, and you can go down and you can see that's how it begins. And then you see that two checks are outstanding, and so those two checks are listed, check 5523 and check 6547, and they total $19,620. And so you would list those. And where do you list those? Well, you list those as items that the bank doesn't know about but you know about. So those go on the bank side, on the bank statement balance side of the reconciliation. So things the bank doesn't know about but you know about go on that side. Then check 5386 for $2,000 is removed from the bank account correctly, but it was recorded on the accounting records for $1,760. So that's where our recording error is. Now that's something the bank knows about because the bank properly processed the check, but we see that we recorded it incorrectly in our accounting records. Not sure how we would make an error like that, but in any event, there's an error that we made in recording when we entered the $2,000 check paid, and so we have to deduct the bank balance by the difference, the $240. So that goes on the right hand side on things that the bank knows about that we goofed up. Then the next item The fourth one is the July 31st night deposit. So that's something that we know about, but the bank didn't get it on the bank statement because the night deposit wasn't reconciled until the following day, when somebody came in and found all the bags in the night deposit box. So we see that deposit for $34,300, and that goes on the bank side because the bank didn't know about it when it prepared the statement. Then we also find that there's an error on the bank statement of $320. That's the one where they took it out of our account, but it should have come out of the account of another customer of the bank. And so we tell the bank about it and get them to correct it, but we also put it on our worksheet and adjust the bank's numbers back up to where they should be. And so that goes on the left-hand side of the reconciliation. Then number 6 is the credit card collections. Now, nowadays, if you have a merchant's account, you are probably entering all of your receipts as your customers charge their credit cards. And so that's something that I think went into in the chapter on merchandising transactions. I didn't spend a lot of time on that, but it's unlikely that you would find out about your credit card collections just on your bank statement at the end of the month in a note that's in your statement. But in any event, this assumes that that's how you recognize revenues for credit card charges, and if that's how you do it, then you have to make this adjustment. And then number 7, the bank notified that Burson's check bounced, and so that has to be adjusted off of the company's book side of the reconciliation, the right-hand side of the reconciliation. And then you've got the information about the bank service charges. So now what journal entries do we make? Well, we make the journal entries. Just remember, we're adjusting our books. So we're having to adjust, we're making the journal entries for the bank reconciliation basically for the right-hand side entries. And so we're going to show the collection of the note, collection of the credit card entries. So we've got we collected the $60,000, we got the $1,800 in interest receivable collected, and so we show that the cash is collected. So this assumes that we set up the credit card payments as notes receivable. I would guess that they would be considered to be merchant account receivable or something like that, and interest receivable. But anyhow, then we have the correction for Burson, so we add back to his accounts receivable the $2,200, plus we're going to probably pop him for a fee, but that doesn't show that here, just to keep the example simpler. So we would probably charge him some sort of bounce check expense as well, but in this example we're just crediting the cash, reducing the cash that for the check that didn't clear, and adding it back to accounts receivable for Burson. Then we've got the dues expense for the incorrectly recorded check. You can see we're increasing the expense and then also crediting cash for the difference that we didn't record earlier, and then we're showing the service charge expense and crediting cash for that. And those are our journal entries that are needed to correct the books for the bank reconciliation. So I hope that you find this of interest. Being able to prepare a bank reconciliation is one of the key skills that you learn in this class that will make you more employable to a prospective employer. So if you understand this example, and if you can duplicate it, if someone ever asks you, can you do a bank reconciliation, keep access to this particular section, maybe print it out, put it in your bag of tricks, and you'll always be able to say yes if someone asks you that question. So with that, I'm going to say goodbye for now, and good luck on your final exams. You will find this particular example very helpful on your finals. Thanks. Bye-bye.